lot of the times when we talk about Dividend King stocks, we see companies with great histories of dividend increases and definitely went through periods of massive growth. By the time they're a Dividend King, a lot of the times the growth rates have slowed and the dividend growth has slowed as well. But that is not the case for this Dividend King, and that is Parker-Hannifin Corporation, stock ticker PH, trading at $529.40 per share. Over the past year, they have way outperformed the market, up 64.44%, and year to date up almost 15%, and this company also announced a massive dividend hike of around 10.1%. So both of those things are not typically something that you see from a Dividend King. And they also released their latest quarter's earnings report not too long ago. If we come down here, we can see Q3 non-GAAP earnings per share came in at $6.51, which was a beat by around 40%, so that's a pretty big beat, and revenue came in at about $5.07 billion, which was up barely year over year and was also in line with analyst expectations. But something we also have to talk about is the future outlook. If we look at this, we can see the company expects total sales growth in fiscal 2024 to be approximately around 4%, when previously they were projecting around 3 to 5%, so that is in line with analyst expectations. Now we can also see earnings per share in the range of $20.80 to $21, or $24.65 to $24.85 on an adjusted basis, when previously they were expecting around $23.90 or $24.50. So for the most part, the outlook for this company is remaining pretty good, helping to drive up the share price in my opinion. Now let's go ahead and jump over and look at the dividend breakdown for this company. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. But let's go ahead and come up here, plug in PH and hit enter, and you can see all this data is going to automatically load in. Now we can see the starting dividend yield for this company isn't anything too crazy. It's sitting at about 1.23%, so a relatively low starting dividend yield. They're currently paying out about $6.52. But there's a lot to like about this company from a dividend perspective. Starting out, look at that 10-year dividend CAGR, sitting at 12.16%. The 5 years even higher, sitting at almost 14%. So over the last few years and over the past decade, the company has rapidly increased the amount they are paying out in dividends. It's really quite impressive, especially for a company that is a Dividend King. Look at this, in 2013, the company's paying out around $1.78, and in 2023 around $5.77, and it's now sitting at $6.52. That's pretty unbelievable dividend growth for a company increasing dividends for 50 consecutive years. But here's what's just as impressive. If a company is increasing their dividend payments, but the free cash flow payout ratio is increasing over time, it means those dividend growth rates aren't going to be sustainable. But we can see the free cash flow payout ratio, for the most part, has stayed below 30%, meaning the company still has plenty of free cash flow left over to reinvest back into the business. So we can see the 10-year free cash flow CAGR sitting at around 11%, in the 5-year, almost 14%. So we can see here free cash flow versus dividends paid out. Free cash flow has been rapidly growing over the past decade, and dividends have been consistently growing at a high rate as well, but free cash flow is still easily covering those dividend payments. In 2023, the company generated around $2.6 billion in free cash flow, while the dividends paid out was around $704 million. So from a dividend perspective, I really don't see any red flags for this company. Everything looks really great, but there is a couple of things we do need to point out. Now, first off, let's go ahead and jump over to our profitability spreadsheet. Now, the first thing we notice is earnings per share has done a decent job of growing over the past decade. It's gone from around $6.36 all the way up to around $16.23. That's pretty solid growth, and it looks like a lot of that growth came within just the last 4 or 5 years. But if we look at the revenue growth, it's been quite a bit slower. The 5-year revenue CAGR sitting at about 6%, and the 10-year revenue CAGR sitting a little bit below 4%. But if we look at net income, we can see the 5-year net income CAGR sitting at around 14.4% and the 10-year at 8.19%. So how can the net income CAGR be so much higher than the revenue CAGR? Well, it really boils down to one thing. Look at this gross profit ratio over time. In 2013, we can see the company's gross profit ratio sitting at about 22.5, and in 2014, around 22.9. But if you look at where it was in 2023, it jumped all the way up to around 33.72%. So over the last few years, the gross profit ratio for this company has actually been increasing at a pretty high rate, which is a huge advantage, especially for companies that are Dividend Kings, because these companies don't typically grow revenue at a high rate. So a great way to get more dollars to the bottom line is by increasing that gross profit ratio. We can see the 10-year average gross profit ratio is around 25.4, but again, last year it's sitting at 33.72. That is a huge increase. And that is exactly what has led to so much growth in the bottom lines. Now, if we jump over to the stock screener spreadsheet, there's a couple of more things we need to point out. First off, we can see free cash flow per share done a good job growing, revenue per share has definitely been growing, and earnings per share, like we just saw, have been growing as well. But we can also see one of the priorities for this company is buying back shares. In 2013, shares outstanding was around 149 million. In 2023, it's sitting at about 128 million. So that's not a massive reduction, but the company is buying back shares, which is something I typically like to see. But here's where I have a big concern about this company overall, probably my biggest concern, potentially along with valuation. If we come over here and look at return on invested capital, this is basically telling us how profitable are the projects that the company is investing into. And if we look at 2023, return on invested capital of around 5.48%, and in 2022, it's sitting at about 7.5%. That is quite a bit lower than I would typically like to see it. And long term, it's pretty difficult for a company to achieve high rates of return when return on invested capital is so low. When you consider the fact this company over the past year is up around 64%, but return on invested capital is so low, it does give me some concerns about the future and potentially some concerns about the valuation as well. We can see right now the free cash flow yield for this company sitting at about 3.83%. So from a free cash flow yield valuation perspective, it's not necessarily terrible, but I honestly would probably like to see it a little bit better. And keep in mind, free cash flow yield is basically telling us how much free cash flow per share we get for the price that we're paying for the stock. So Parker-Hannifin has definitely had a good run up in share price over the past year and pretty good over the past decade. The dividend metrics look great, but overall, I just can't find myself buying this stock with the return on invested capital as of right now. But go ahead and let me know what you think of this company in the comments down below if you plan on buying or selling, or even just adding it to your watch list. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.